Hey guys, how are you doing? That was I will actually say, interesting day. Uh, a lot of selling across the board. The Nasdaq, the SPX, the Russell, gold and silver, especially silver took a big hit. Gold miners, silver miners did very well compared to everything else. Again, it's one day. Let's not make any conclusions just yet here, but yeah, let's again see here. I will look at a decent amount of ratios, and then we will quickly look into gold and silver just to, again, I'm not gonna, it's just observation just to see the scoreboard for the day here, really. So, cool, let's dive in here. And one thing we don't like to see, one thing that we really, really don't like to see, let's remove the short-term stuff here just to get a clear view of the chart. And that is, this is the weekly. And as we talked about, once we start to get north of 92, things can get really, really messy at any point, and that was yesterday. So the markets right now is in huge stress, very, very big stress. I wouldn't say liquidity issue yet here because we're still having the dollar coming down, but if that starts to climb up as well, if it does, that is not good, because that's what happened over here. In 2020, initially the ratio here went up, the dollar went down, and then it came on a week later or so, and just that's when you have the liquidity issue, and that's when they have to do the money printing, because that is very, very bad for the markets. So now there's no fun in this. As mentioned, when we break and we get the spike, which we did today, all markets more or less is in a huge stress. We saw that today. So again, the thesis held. Again, that's a good thing, of course, but again, the thesis held. If we break to the upside 92, things will be very, very bad. And again, confirmation today here. We are now, looking back here, if this is the all-time high spike, you can say we are now at the second highest in history in this ratio. I think I want to draw a trend line here, or like a parallel, just to show you. I think there is one here, more or less something like this here. I want to do that. I want to cut over there. Again, we'll just do it briefly here. Again, this is just to talk damage, control what has happened. And again, we could see 115 here if things are getting really disorderly. So close to 100, we could see 115. I don't think that one will ever get taken out, because that was when we shut down the entire world. The entire world was shut down, and that was the highest it could go. 126. Therefore, again, it is possible, but I can't see that happening. I really can't. So we could go here to 115, but that is still a long way to go, and that will take. What do we have here? April, May. It could take 2 or 3 months here. The spikes only last 2 months or so. Then you start to see the the money printing coming in. Again, it's one day. Let's see how the weekly candle forms. Again, we have 1 day left, so I'm pretty sure it will be maybe something like this, give or take. Good. What else do we have here? I want to just check into. I want to show you crypto first off, and interestingly, again, with crypto is liquidity issues, and crypto did really, really well in relation to everything else, to what happened today. Did really, really well, basically only down, well, basically flat, and you had green even. So we don't have liquidity issues right now. It's just people are very, very scared, and if you don't see a dollar spiking, rates going lower, I mean, the TLT getting bought up, and or crypto getting crushed, I don't think it will be as severe as people think. Again, that's just my view on that one there. So what else do we have here? URNM, the uranium stuff, again, is still linked a little bit to the broader markets. It was down 3%. We have tried that before, even though it was a very, 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 very red day. XLE here. Let's check in on the XLE. This is the energy sector divided by the SPY. So again, long term, still very, very bullish. in favor of XLE. Again, this is a huge wedge pattern break. We rallied, and now we're just having the first pullback after we basically took out the entire momentum, as now pulling back for the first time. Higher high. So for now, XLE is the better play, even though everything is down for the day here. So yeah, what else? This is interesting for me. Now comes, again, if you want to take something out from the video, it's this here. It's the miners compared to the metal. First, let's look at the metals. Gold, I will say, had a good day. Really, really good day. Could this be a day? You can see the candle here. Very high volume, indecision. So it's very clear that you have the levels. Anything below 3,050 means a lot more selling. And again, anything above 3,170 means we're going to have a big rush to gold. So that is the candle indecision here. Anything between is basically chop, chop, chop city. You don't want to be a part of it if you trade. So, and silver, yes, silver down big, 8% or so. We had the rising wedge. I want to show you something firstly here. Yesterday, before Mr. Trump started to do this whole tariff thing, we actually had a very good wedge break here. Textbook, fantastic breakout, retest, resumption, and then kaboom. Right, so a lot of shorting in silver. Gold held well, and this is an indicator that many people bought the gold-silver ratio. I mean, they went long gold, they shorted silver because they could see that momentum, boom, and they're making money on the spread. But it means that silver is getting sold and gold is getting bought. So again, you can see the absolute carnage here on silver. We also had a wedge break as well in that period, and triangle low is here. So I'm expecting a ton of support at roughly 31. We have an upsloping trend line. We have the triangle low. We should find some buyers here, during next week. Yeah, good. Let's check into the ratios once again here. Good, still online. That's fantastic. So interesting here. The AG first Majestic hasn't done well for a very long time, and still hasn't. For the past 4 years, it's been crap, to say the least. I'm not going to draw any conclusions, but on a day where silver is down, what is it down? 6%, 7%. You have first Majestic doing 10%. That means outperforms by roughly 3. Again, I'm not going to draw any conclusions, but that is very interesting to see if that whole thing there is, if I can zoom out, is the start of the break. Interesting, very, very interesting to see the miners here. You can see SILJ down 2%. That's still really good given the day. Gold miners flat. That is very interesting. Again, no conclusions are made. It's just observation here. GDX divided by gold. Interesting, it puked at the lows and then it rallied back. And we did also, roughly, get back above the neckline. And of that whole thing there. And it's very interesting. So you had a flush there of the longs. Retest here, flush, back above. A lot of volume. Interesting. Very, very interesting. Juniors, perfect backtest. Large candle. Yeah. SILJ, look at this, by the way. I want to show you the daily candle first. Let's zoom out. So we have this is the ratio of silver miners divided by silver. In order to be in a bull market for miners, they don't have to, but when they outperform their metal, they are doing insanely well. Because that is the leverage that is getting bought more than the actual metal. Downtrend here. Basing. If we start to break here, I think the miners could be in for a very good period. Again, no conclusions here, just observation, because this is the basing. If we start to rally here, you will have miners outperform the metal. And in almost all instances, it means that both are going up. Both are going up. You very rarely have, the miners doing really well, or let's say outperform silver when silver collapses, and then the miners goes up. Makes no sense. So it has to be that people are sniffing out that the money printing is going to come, silver is going to go do well, and then the miner is going to outperform. Again, just observations. We haven't had any technical break, but again, very interesting, intriguing daily candle. But again, today is an anomaly, so we shall see how it goes here. SILJ, same thing, large candle, of course. Interesting, very, very interesting. Silver divided by the, again, I'm going to say interesting many times here today, because you have silver divided by the SPY down 3%, so silver underperformed the SPY by 3%. Again, silver is down 6, meaning the SPY is down 3%, right, roughly. Backtest at this moment here, insanely hard backtest, meaning very large red candle, a ton of volume. That puts a lot of pressure on that trend line. But today we're backtesting here, and I will say anything below the recent low here at 2.06 is not good for silver. But for now, backtest. So we take it as it is. SPX divided by the HUI. Again, long term, we are very bearish in this ratio, meaning SPX divided by the HUI. Therefore, you are having, you can also draw a trend line here, by the way, taking the first low there, but it's still, you have broken. It might even be better. Anyways, this means that long term, the silver miners, or the gold bucks index, my bad, is outperforming the SPX long term. Will there be pullback, all that? Yeah, for sure. But that's the key here, of 2025 is the breakdown in this ratio, meaning HUI is a better one. We can invert this. Boom, right? That's really good. That's really, really good. Taking into account very bad day and all that. We're still having miners doing better than the broader markets, and you can also see you have the trend line here going across. We make it thick so you can see it. Red, boom. Again, we have broken 3 large trend lines. The red one here is 4-year. These one here are 15 years, and we're actually breaking out. Again, could we have? Yes, of course. But the long-term trend is set, meaning higher highs, higher lows. Momentum, where are we? Pushing up. Again, we have inverted it now. So you're going to switch these two here. HUI outperforming over the long term. Beautiful. That is good. But again, short term here, the markets are very, very fragile. So, GDX here, this is a ratio that I look at from time to time. The GDX divided by oil divided by gold. Meaning, if gold goes up, the two numbers in the parentheses, is that the correct word? I don't know. Becomes lower, and therefore the price goes up. You can also have the oil come down, which it did today, 5%, and then again the ratio is also going down. Then the overall ratio goes up, meaning the miners are making more money from the gold that they sell in relation to energy. And you can see here that actually we have been in a very big bull market for gold miners and their revenue ever since the lows in 2022. Good thing. Targets roughly around here, 3,100, whatever that means, gives in the ratio. Large channel there. So okay, interesting here. We are actually having I'm just thinking here a little bit. Give me time here. This is not good. Okay. Good. So, again, this is the spread between the 10s, the 10-year and the 30-year. And once this starts to come down, it means that the... let me think here 1 second. That the 10-year... I'm going to rethink this. I'm going to come back to this because I wasn't prepared. I'm just having a mind, bleep. Anyways, let's see here. I'll get back to it, I guess. It's late. Sorry, guys. So, XLRE divided by SPY, long term. Boom, 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 boom. Breakout. First pullback after the breakout. Higher high. Good. So far, XLRE again outperforming the SPY, which we look at, I think, higher up as well. What else do we have here? Want to look at? No, I'm just going to go down through it all here. URA, again, Apple divided by URA. This ratio is down. Again, just look at the technicals. I haven't been looking at this ratio for a long time. Boom, perfect. We had it on for such a long time, And again, it respected the trend line. So that is resistance until broken. Down 6% today, meaning Apple underperformed, or dropped 6% compared to URA. URA was down 3, meaning Apple roughly 10. Big down day for tech. And also want to show you, and the interesting stuff here, if we start to trade below here, we are having the, what is it called, the cycle, I don't know, there is a chart of Cisco for 2022 where it had a blow off top, pull back, bear flag, and then collapsed. If this breaks to the downside, you will have a major collapse in Apple compared to uranium miners. Major collapse. But again, it could also be that we're gonna, of course, break out of it, tag the highs here, and then, so we know what to expect when and if certain things happen. Platinum did well here. I think, again, if this is the fault breakdown, that, from that one there, I think platinum could be that sleeping thing that no one is talking about besides, a few guys on Twitter, and you, of course, as well, knowing to platinum. Interesting here, platinum could be one of those where people will start to talk about platinum 3 years from now and saying, oh, it's so bullish, but at that point in time, platinum could be at 2K or 2.5K or, more. I'm very fond of platinum, but we have to get the timing right because it's a, what's it called? Natural gas is the widowmaker? Yeah, widowmaker, I think, yeah. I think platinum is to a degree the same thing. Good, that is it. I have nothing more here really on those. Should we check into very quickly the ET? This is red, by the way. This is very red. Funnily enough, fan, wind energy, green. I don't know. It doesn't mean anything because fan has to trade above these two lows here and those two highs at 18. 16, excuse me, before bullish. Before anything, that would be beautiful, by the way, into fan. But looks very difficult now. Copper miners, back testing again here. But we're also breaking down from the longer term stuff. Short term, long term, tricky. What else do we have here? I want to show you, what do we want to, oh, this is it. I want to end the video with this. Because basically what happened today, gold miners showed relative strength against everything more or less. Did really well. And I wouldn't have thought that given gold were down to $2% at one point today, and silver was down 8. So we had that huge crunch initially here in the ratio of the gold to silver, and the miners did well. Again, it's one day. Again, if we get more and more stress potentially, and that spike goes high in the ratio, yes, then again I expect fully the miners to do poorly. But for now, look at this one here. I want to zoom out just again here. Roughly 20 years, 13 to be exact. Large channel here, and we're peaking above. That's really bullish, but it's also a place where it is insanely fragile. Yeah. Because if we break out here, and we're going to come down to here, again, that's when you have a false breakout, and all the bullish views are going to say, oops, and we could have a bad period for the gold miners. But for now, again, breakout, backtest, the daily here. So it is very clear to me here, as long as we're above, basically, let's call it the highs here, just to give it some wiggle, 42.6, gold miners is a good place to be. And especially if we take the breakout high at 47. Then we have broken a roughly 20-year range. We have been breaking out, we have been retesting, and resuming in a period where the markets, is in a lot of stress, like we saw maybe, in 2020, 2008, 15, the 2000s even, the 1990s, a lot of stress due to the silver to gold ratio, gold-silver ratio spiking. I will say, if we don't see the Dixie and the rates coming down hard, that is the path, by the way. But if the Dixie, the dollar starts to crunch higher, Again, right now it's doing that, of course, but if we get that move like it did in 2020, where it started to first drop and then come back hard and then collapse again due to money printing here, if the dollar starts to crush the other currencies, I could see that one happening there. Again, that is my thoughts. SIL here, very close to that 20-year break, roughly 15 years, very, very close. Gap fill today, we close back in the bull flag. So miners, again, it's one day. Don't take it as a conclusion. Very strong relative to everything. A lot of volume as well. Interesting is a very, very the specific word here, I will say. And look at that again. If we break this stuff here on the SIL, gold miners, anything above 42, you want to be extremely long in gold miners. It's a big call, but you really want to be heavily, heavily invested into silver miners when, if that happens. Because you're breaking a 15-year wedge pattern almost. Again, when it happens, I don't know. But right now that is the double resistance to take out the long-term wedge pattern upper. Horizontal level, a lot of things going on here. At around 42, right? You can see it going across. A lot of things going on here. So let's see if we can break it. It's all, if it happens, that's when things could escalate big time to the upside. I will say if this trend line here gets taken out to the lower side, bearish. It's very binary sometimes. Like that, that's the uptrend that we want to hold. So this, guys, very, very, we will be fully allocated into silver miners and gold, of course. And this, yeah, you know, short. It's not. This is a bigger break due to the long-term trend line getting broken. This is you know, a 1-year trend line that is getting broken, but it means that we are, again, most likely could come down to like 37 to 24 if that is the case. We shall see. I don't have much more. Again, this is my thoughts on the. I do have more. This is my thoughts on the markets today. I haven't planned anything specifically. I do have some stocks that did get a little warning sign today here. I will share that tomorrow just to see the day after this whole thing here. But before you go, I think KRE, that is regional banking. I can't remember exactly what is in the ETF, but to me here, very, very dangerous things is going on here. I want to find the exact channel I just had on. If I remember correctly, we had something like that. Yes, there it is. Good. 15 years again, right? This one here, tag there, overshooting, 08, again, stressed markets. And you have two here. And what happened today, I think it was today, if I remember, we did actually, if we stretch it all the way out, big technical breakdown in this ratio for the banking sector, down 10%. Breaking down from a 2-year channel. To me, this indicates that we are going to go down to here at least, you know, roughly 36 from 52. That's a huge drop. And if that gives in, let's say we tag it there, we will most likely have a pullback. But if this one gets taken out, the banking sector, the regional banking sector, whatever that indicates, I can't remember what is in that ETF, but is in a ton of pain. A ton of pain. But again, we will most likely not see that getting broken during 2025 unless things are getting super distorted. That will not get broken in 2025, maybe in 2026, right? So, good guys, thank you. That is all. You know, these days they don't come around often. That's good, but that doesn't mean we can look at it and see what is happening. And the main takeaway for me personally, gold miners, silver miners, it's a one-day thing, I know, keep that in mind, but they are having a lot of relative strength compared to markets. Basically, you know, flat, the gold miners, and the Nasdaq is down 6%, 5% or so. again, if we have a lot of selling in the NASDAQ and the SPY over the next few days into next week, that will most likely pull down gold miners as well, because all of a sudden people have margin calls in, you know, some positions in the NASDAQ, and then they will have some gold miners. I will sell because I have to create liquidity to cover those losses, and you know the deal. Good. Let's see tomorrow what it brings. Cheers, guys. Bye.